Mhm. Hello, everybody. Welcome to the Sunday live stream. I'm joined as ever by my friend, Jerry V. Hall. Jerry, how's things over there in Costa Rica?
Oh, man, it's a sunny day. I have a sunny outlook. Life is incredible here in paradise.
Yeah, I got a pretty good outlook. Yeah, that's great. I got a pretty good outlook. I live in paradise as well in Puerto Rico. And, I know people will say, well, that title and that thumbnail doesn't seem very optimistic, Rob. Just wait. So today, what we're talking about is the 5-month bloodbath isn't over. And as we take a look at it, we all know how much our portfolio has decreased, and it's decreased quite a bit across time frames. And if we take a look as far as the Bitcoin percentage drawdown from an all-time high. So if we can see here, 6th of October 2025, we've gone down. Actually, the lowest point, we were essentially at 50%. We had dropped 50% in roughly 4 months: October, November, December, January, February. Almost to the day, 5th of February, 4 months. And as of today, we're sitting around 67,000, which is almost at 50% as well, at 46% drawdown. So really it comes out of this. You got two choices. You either got to believe that we're going to repeat the same thing, which is the 4-year cycles, or we're not. And in that situation, for that, everything kind of gets thrown out the window. If you say, well, 4-year cycles doesn't make much sense because miners aren't as relevant as they were before. Because back in the day when we went from 50 to 25, then 25 to 12.5, and 12.5 to 6.25, that's not a big deal now as far as halving. So this makes no sense to me. Or I think it's something different. So Jerry, before we go on and we start talking about ROIs and peaks and where things are going, what's your thoughts about repetition here? Because I don't think we see things the same way.
No, I think that's completely okay. I think for a long time, the disbursement of new Bitcoin that came from miners had a tremendous effect on the price of the market, pending if those miners were releasing the Bitcoin that they were mining or not, right? And so they could toggle. And so, in other words, I think for the first 10, 12 years of Bitcoin's existence, miners played a big role in the price of Bitcoin. Therefore, the 4-year cycle, the halving of Bitcoin, was a contributor in that overall, we'll call it math model.
Yeah.
I think we're in a different place now. I think we're in a place now where the majority of Bitcoin that is moving around in the system, whether it's being bought or sold, is coming from buyers and sellers, not miners, right? Miners are only releasing not releasing. Hang on, let me track that back. They're only producing 480 Bitcoin a day. Am I correct?
Yeah, 480. Well, I'll go with that.
That is a relatively small amount when you look at daily volumes of Bitcoin being traded around. Therefore, the migration from a 4-year cycle playing a big role on Bitcoin's price, I think, has rotated now to its big players. Its players who is moving, buying or selling this Bitcoin. And I think that will play itself out and will become more and more evident as more and more data comes to bear. But I'm pretty sure I'm right. I could be wrong, but I'm pretty sure I'm right.
Well, we all know that over the last, since 2009, we have these halving years, and half of the Bitcoin is actually being produced for every block. So, you go from 50 to 25, and 25 to 12.5, and so on and so forth. So there may not be as big of a factor. And I think that is a lot of the cornerstone of the traditional finance folks who talk about this and say, look, this actually makes no sense as far as a 4-year cycle. So if we believe it or not, maybe it just wasn't, it was that in the beginning, but then as we go forward, maybe it just comes down to just the natural cycles like we talk about. There's always a cycle. There's always something that can fit into it. Maybe it's just the midterm types of things. So if we take a look here, the historical presidential cycle average versus the S&P 500, every midterm election year, you go down. And just take a look at what's going on with the price of oil. price of oil is spiking. Is it because there is a hindrance of getting it out of the Strait of Hormuz? Yes, absolutely. But for it to jump up, I want to say it's like 30% higher today than what it was on just a couple of days ago. Potentially, but I think the market's just, they price things in, they try to front run everybody, and that's just it. So the midterm election, maybe it just lines up that way with Bitcoin. And we can say here, US stock market returns across the election cycle. Presidential election year, everything's looking good. You know, we just had one, 2024, was a great year. Post-presidential year, not too bad. Midterm year, awful. But I want everybody to focus on this. The post-midterm year is usually pretty bullish as things start to go forward. So again, you got a couple choices here. You can believe in it or you don't. And then, of course, that will trigger how you respond and what your investment strategy is. Now, me and Jerry can't tell you what that is because we don't know your specific situation. And we're not financial advisors. But also as a reminder, 100% of the time, since 1942, buying the S&P 500 on midterm election day, November, whether that be 2026, 2022, 2018, keep going back, 2012, 2014, 2010. It generates a median return of plus 15% through June 30th of the following year, only 7 months. This has always happened since 1942, and here's all the numbers. So not too shabby. And that's why I asked this question. I said, hey, how much would you invest if you were nearly 100% certain that you could double your investment in 2 years? Now stick with me on this one. First of all, we need to take the bad news with the good. Your ROI, this is after the cycle peak, which I'm taking a look here. This is January, The ROI from the peak was October 6th, but I want to take a look at, actually, I'm just going to refresh this. Get rid of this, and this. I don't care about this. This is how much you've fallen down from October 6th. Again, we took a look at this. So we want to take a look at, historically speaking, of the last cycle, because the cycle bottom last cycle, cycle top was November 9th, 2021. Look how close we're tracking to the last cycle. I mean, it's pretty close, except when we diverge right here. This is December 1st, 2025 and January 4th because of the time frame of when we actually hit a top. We hit a top in November of 2021, and this time we hit a top in October. So we're a month behind in this one. But I want you to notice is how it diverges here. It actually is different. And that's only because the time frame, and we're not at this point, the midterm year. Because in 2022, that's the midterm year. We're still in this 2025. So if we just zoom out and take a look, I think we're tracking right along with where we're going to be. And if this is any predictor, again, it's up to you to determine if this is going to actually happen. If we're here and we're following this along, look how much farther we have to go down. So if that's the case, as it has been happening every single time, happened here in cycle 3, or peak 3, peak 2nd, and peak 1 was even more disruptive. So if we have this right here and going down, what are the options? The options is believe in it, not believe in it, or plan accordingly. Now, me personally, I still think we've got a long way to go down. But I will still keep buying a little bit because I don't know what the absolute bottom is. And if we try to time bottoms and tops, we usually end up failing. And as a reminder, people say, well, that's not true because all we got to do is just, make sure that we check indicators. How many of these indicators fired for the top? I'll wait. None of them. Not one of these fired for the top. So is everybody saying just wait for the 200-day moving average and then dump everything into it? Or wait in the 250-day moving average and dump everything into it? What if that doesn't happen? It's just something to consider moving forward. But I will tell you, historically speaking, after the cycle bottom, This is the last cycle. Do you remember this when Bitcoin was like $15,000 or something like that? Yeah, those are good days. Look how much the return on investment hit us. Roughly about a 8x. So if you're thinking about this, you're like, well, I don't really know what to do, and I think it's all going to go to zero. It could, but that's why I asked this question. How much would you invest if you're nearly 100% certain that you could double your investment in 2 years? And that's just historically speaking. Anyhow, I was rambling a little bit. I apologize, Jerry. What do you got for this one? There's a lot to take in there.
I am actually, while you were showing the presidential durations and the percentage of 7-month yield, basically, I was thinking to myself, I could go to my Roth IRA and prepare for this midterm election day coming, I believe it's in November, correct?
Yep.
And strategize, because I mean, if I can pick up 15% in 7 months, tax free, that is literally like getting 30%. And that's monstrous. I don't know if anybody has ever experienced 30% gains in their stock portfolio, but it's massive. I mean, it's not normal. It's outsized returns. And in my Roth, obviously, I can trade without consequence. So you gave me an idea, and I made my little note. I got my little sticky note, and tomorrow when I have some time, I'm going to go to my Schwab account and I'm going to take a look at that, because everything I'm holding in there is kind of based on the long term anyway, right? So I make this trade for 7 months, collect my average 15%, and then just trade back into those assets that I want to hold long term anyway. And what's the downside risk is that those assets in that portfolio that I already have exceed the 15%. In other words, they gain more than the 15% I gained on the index trade. Yeah. I don't know. I'm gonna have to weigh a few things, but this is you gave me some food for thought, and I thank you for that.
Yeah, no problem. Well, I mean, like we're talking about Roth IRAs and stuff. Now I use iTRUST, and for iTRUST, which is great for retirement accounts, but they also have this great thing called custody, because I have to diversify because I'm paranoid, and I'm just paranoid about it getting hacked. So I got a TANGEM and a ledger and a Roth IRA. And as a reminder, because Jerry, I had to pull this up as a reminder, if you're in the States and you got a Roth IRA, you've got until April 15th to contribute to last year. Why is that so important? It's because you can only contribute so much per year to your retirement account. That's why, you can't have a billionaire just going, hey, I'm just gonna shove $500 million into this Roth IRA, and then next year just take it all out tax free. It doesn't work like that. You have between $7,000 and $8,000 unless you do a backdoor Roth IRA, which there's even limitations to that. So just know that if you wanted to load up, like Jerry's talking about, you got till April 15th to contribute to 2025, and April 16th you can contribute to 2026. But that's up to you. I'm just saying that's what it is. And I will say lastly about this custody account, when I first got into it and they said they're going to offer it, I go, well, who are you using? Well, we're using the same custodial services that MicroStrategy and BlackRock are using, which is Coinbase Prime. And I was like, okay, well, that sounds pretty good. But then when you go through the process to sell and get it off the platform, let me tell you, I had to, you sign a document when you sign up for this that you can't talk essentially how specifically how it works. But let me just tell you one thing. For a hacker to get that, there's no way. It was even a pain in the A for me to get it. And I had to go through hoops to get it. And people say, well, that's my money. How dare you? You won't say that if you ever gotten hacked. So just remember, some of the things, they make them a pain. And I'm glad that iTrust does this way. Anyhow, that's pretty much it for today, everybody. If you like today's video, give it a thumbs up, consider subscribing. Now I just wanted to go over the little Q&A because Jerry's got some things going on today and I want to keep him too long. So let's see what we got. Daniel had a good comment here. He says, I think people gave up on crypto. I agree. I wholeheartedly agree. We keep losing and losing. No good news. Whoever's going to play games with this should be identified and explained why they're doing this. And as far as like playing games, you got Jane Street and you got the market makers that got screwed over in the Binance October 10th issue. They have to make their money back. But as far as like Jane Street, that's just another TradFi screwing over everybody and, well, manipulating the markets. Let's be honest, it's what it is. But as far as like giving up on crypto, yeah, people are gone. And I don't think they're going to come back. But I will tell you this. How long's gold been around, Jerry?
A couple years, for sure.
Yeah, at least, you know, maybe the same time that Satoshi put out the white paper, gold came along. Do you remember that line to get gold, to buy gold and to buy silver, wrapping around the corners as everybody couldn't wait to get gold as it hit 5,500? They'll always come back. They'll always come back as soon as there's a narrative and there's a big pump. And that's really all it comes down to. The retail will do that. And it's the people that have been here for quite a long time will take advantage of that. That's how it always is. All right. Jane Street is the FTX of this cycle. Jerry, have you been following this FTX issue? I mean, excuse me, the Jane Street issue?
The 10 a.m. algo. Yeah, a little bit.
Yeah.
Okay.
It's just one more manipulator.
Manipulate, right? Am I shocked that there's greed and manipulation? Absolutely not. The human condition hasn't changed that much, even though the tools in which they implement these things have changed, right? But
right.
At their core, most people, unattended, unsupervised, tend to land on their self-interest over others.
Yeah. And you know what? This is the thing, like, and that's that point right there. There's self-interest over others. When people keep thinking, you know, like, hey, it's, you know, just hold on, just diamond hands and don't take profits because, you know, it's going to be the greatest thing of all time. That's true. It is the great. I mean, Bitcoin and certain altcoins are great. They do great things. Unfortunately, there's always going to be people that are bigger than us that manipulate the markets and screw over everybody for their own self gains, and that is the big unknown that you can't really take into account for. You can try to trade around it and hopefully jump on that bandwagon, but it's very difficult, and that's why, like, you have to, you know, just be, if you're not a big institution, you're not a big player or a market maker worth billions, it's very difficult to make gains. You got to jump in and jump out and take profits. Let's see. Green Blue says, the best invest right now might be small fuel efficient cars and scooters. Probably double your money in 3 months. I think the biggest thing, have you seen that the new Tesla robo-taxis getting rolled out? Jerry, would you buy a fleet with your millions, or would you?
Would I buy a fleet? I don't know about a fleet. I think there are a couple of really cool use cases, right? There is the robo-taxi element. A car like that is literally a small data center, right? And so plugging that kind of compute into an edge compute network.
Yeah.
In addition, I mean, I would see it more than just taking a person from here to there. I think there's a larger business there within that confined of that one vehicle, right? When you add a couple of them together. And so I think it's really interesting. And I think what's even more interesting than the specifics of a robo-taxi is the concept that using some of these new tools and technologies to create revenue aside from how we came into this game by just taking our investment dollars, putting $1 in and hoping to get $1 out. Yeah. Right. That there is something even bigger here to take advantage of. And that is the growth potential of businesses that can be created in this particular window of time. No differently than in the late 80s and early 90s with the onset of personal computers, the wireless communication, and then obviously the internet, right? The revenue opportunities are massive for ROI in businesses that actually succeed. That's the key point. That actually succeed. There's a lot of startups. Sure. There's a lot of startups, man. There's a lot of altcoins.
And it's the ones that succeed. And I think this is where we start to shake all the, and I always saw it like this, like businesses that fail, either they fail or they get bought up by bigger businesses. I think some of these altcoins that are failing, and there's no shortage of that, they're either going to get bought up, or the developers or the communities get absorbed into something bigger. And before you know it, you just have this big conglomerate, this big massive juggernaut that could be the Amazon of altcoins. Amazon and Facebook, they didn't really, I mean, they created their own thing, but as time went on, they're like, we don't want to create that. We'll just buy it. We'll just buy it and absorb it. Look at WhatsApp. Take a look at Instagram. They didn't create that. They just absorbed it and said, here's the money. And I think it's the same thing with like some of the top 10 alts. Like, we're not going to build that. We're just going to absorb you, not you, you suck, and then you. And that'll pretty much be it. I think. I could be wrong. All right.
No, I agree. It's a strategy made famous through the 70s and 80s, right? And 90s. Merger and acquisition. It's not a new science. It's not a new game.
This is true. Echo says, not as many in the chat. Is this the bottom? Oh, no. It's going to get even worse. There's going to be more people that I get shaken out, and that's okay. That's how it's supposed. That's how it's supposed to be. And when I say shaken out, I don't mean like that as a derogatory term. I think it's some people just like, you know what? I'm already going to set it. I'll just wait for this certain time frame, or this certain moving average, or this certain news, and I'm just going to sit it out for a bit. Nothing wrong with that. Or and like I said this yesterday on the show, and it kind of confused people, where I said, if you have the opportunity and you're still in profit or something, maybe not a bad idea to take a little profit. And then I said, and start to reaccumulate. And people are like, that doesn't make any sense. How can you take profits and then reaccumulate? Here's an example. You buy Ethereum at $10 and it goes at $1,500. And you've got, actually, no, let me rephrase that. You bought it for 10, it goes up to 5,000, right? Then it goes to 4,000. You're like, maybe I should take some profits on that. Just take some chips off the table and de-risk. And then it goes down to 3,000, then to 2,000. Then maybe start to accumulate there and just kind of bring it back up. But people say, well, why don't you just wait till it keeps going back up? Here's another example. There's a crypto project. I call it a dash of salt. Dash was nothing. Salt was nothing. Pennies went up to whatever it was. It was like 100x. What if you could just de-risk yourself and take profits, and massive profits along the way, and then maybe start to buy again, and you reaccumulate, but it doesn't work out. At least you have the profits over there. Sometimes it'll work, sometimes it won't work. But I'm just saying, like, it's better to have profits than have everything go so low that you're just like, okay, now I got to sell at a loss. But if you believe in the project, you can keep buying it in and lower your cost basis. That's the big thing. Just de-risking, that's all. I think that's it. Let's see. Stone says, learning the top indicators was a waste of time and a distraction while Bitcoin was tanking. Pretty true. Speaking about the price never goes down below the presidential election, is this bear market different? Certainly is. What we're explaining here is this, where the price of Bitcoin never goes below the pre-election or the presidential election day. In 2012, it never went below 10 after November 6th. November 8th, 2016, it never went below 707. On 2020, it never went below 14,000, although it came close, 15,700. And in November 5th, 2024, the price of Bitcoin was 69,432. And even today, it's lower than that. So is this bear market different? As far as price action goes, yes. Also, price action for Bitcoin pre-halving, it actually hit an all-time high before the halving came. So everything's different, but one thing that remains the same since, again, the 50s, midterm years are still here. I think the 4 years are still intact. And whether you think it's a minor issue or presidential election issue or a macro issue or a World War III issue or an ISM or a non-super cycle issue, whatever you think it is, it's still kind of converging that I still think we got a lot lower to go. I could be wrong, but that's where we're at. Jared, any last words of positivity, as I am nothing but negativity today?
Well, I don't think you're negative. I think it's super important that we all understand some basic foundational elements of markets, right? Markets tend to go up when we have certainty, regardless of the actual direction, but when we're certain that that is the direction, right? When we're certain of a direction, there tends to be a tremendous amount of, certainty, and certainty is what it is, right? Uncertainty, which is kind of where we're in with, we're in this conflict with Iran. You've got oil, which is the foundational commodity that drives the planet, right? Everything is derived from oil. It's uncertainty. You've got political elements. The stuff about our particular industry, this crypto industry, at least centered around and foundationally anchored to Bitcoin, all of the uncertainty to its future and viability are being wiped away. And so therefore, what's happening with price suppression is got to be outside of its fundamentals. And that is what I'm looking at. And that is why I continue to acquire Bitcoin, because the fundamentals are stronger and stronger month over month, quarter over quarter. It's just the outside capital market structure of the world that is getting all these downward pressure, right? The uncertainty of oil, the uncertainty of conflict, right? Money diverting from what might have been crypto into, we'll call it industrial businesses like Lockheed and Martin and these, we'll call them military industrial complex, AI. There's a lot of stuff vying for that investment dollar out there that have stronger narratives in the moment than crypto does. But Bitcoin's adoption and Bitcoin's fundamentals have never been stronger. Therefore, I don't see any reason why to not keep going in that direction, especially with the fundamentals of the thing, right? 21 million total. There can never be any more. Stay away from rehypothecation. Buy actual Bitcoin that I can custody. These are all very fundamental principles that aren't available in any of those other investment opportunities.
Yeah, well said. And I think the fundamentals of what will drive it. Unfortunately, retail is slipping away, and that's okay. They'll come back once we get the new narrative. But that's it for today. So look, like today's video, thumbs up, subscribe, follow Jerry. I got to get Jerry out of here so he can do his thing. Thanks, everybody. We'll see you in the next one. Have a great rest of your weekend.